Good morning and welcome to the Trading Lounge, and here we're looking at the Dow Transports here. And as we've mentioned before, the price being under the 5,000 here certainly sort of creates weakness in the support level here. It's had this one retest here where it's failed. We'll probably get another one, but while it's under that 5,000, it just really offers a bearish bias to the US markets. When we have a look at the Dow Jones in the bigger picture, if we move into, so this picture here, what we can sort of see here is that on one level, we're essentially working across the number one level here, which is the 10,000. That's where the corrections are occurring through here. Because we're at sort of old highs here, you just expect resistance at those levels there, and there is a bit of a trend line through here too, in terms of just moving that to the top here as resistance there. So we are expecting resistance up there, and but we're still positive while the structure is giving us impulse waves to the upside. But we're mindful of any change in internal structures to the downside, and this is just the daily chart again here for the US markets. But we just want to drill in quite closely here, because it's really all about, at this stage here, it's all really about the 13,500 here becoming support or resistance. Now, as always, there's really just two types of corrections that can happen at a level or at a price, unless it doesn't stop there or unless it fails. There's just two patterns really. There's the overshoot pattern, which normally gives you the distance above or give you the distance below. Otherwise, it will just be the classic trading levels pattern, which is very much like what's happened here at the 13,000, where it comes up, it has a corrective pattern under it, has the arrival, the reaction, checking for support, then the first high above the level, and then checking in for support there, and then moving up from that point. So we're still sort of halfway through this process. This process here is a bit like the arrival here, really, and it's doing its correction here at the moment. So we're just zooming in here and looking at this particular correction here, and it does give us a bit of a bearish picture at the moment, because from the high here we can see quite a clear 5 waves to the downside here, which could equal the A wave, or wave 1 rather. So the A wave, of course, would be an ABC correction in terms of an A and a B wave, and then a C wave coming down, and taking the low out here. Or if it's going to be wave 1, that's going to give us a larger structure to the downside. So this would be down for 1, back for 2, down for 3, 4 and 5, which would take us much lower through here. So there is this bearish pattern that's happening here, and the market has been trying to test higher through here, but meeting supply and failing through there, and so forth here as well. The retest here into supply is failing. This is likely to do the same here, so it's a point to consider and to watch. So if it fails this time here on this retest of 13,500 and then makes new lows here, then it's going to start giving us a little 5-wave structure to the downside at that stage, isn't it? So there's further weakness that can develop in the US markets. If it's going to prove me wrong, well, then that's fine. Then then obviously it just needs to find support on the 13,500, and support here would have to be, have to move above it and then come back and check on it to find that support there. So all I'm pointing out is that in the bigger picture, there is, we are expecting, resistance at these high levels here, and then we're just drilling down in here and we're saying to ourselves, well, it's got this 5 waves here and 3 waves back up, so it's giving us impulse waves to the downside, corrective waves to the upside. So we need to be mindful of further downside. That's all we're sort of pointing towards here, and this is the same for the S&P 500 as well. We've been looking at this little ABC correction up through here, and in terms of this is the Dow Jones, the same thing as well. Let me just find the S&P 500 here for a moment. Here we go here, sorry about that. It's the same pattern though, in terms of we've got in this way, it's got 5 little waves down through here. It doesn't count the same as the Dow Jones because the Dow Jones made a new high above its previous high here, where the S&P 500 didn't. So there's various ways to count this down here, and we just need to consider both of them. But what I'm just doing here is I'm looking at this pattern here, and it's quite clear that there is an A and a B and a C wave to here. Sure, there is an A and a B and a C wave to here as well, so that's a bullish pattern as such. So it's just easier to use the levels here. So we know that 1450 is a bit of a line in the sand. It was support, now it's resistance, and it's checking that. So if it finds support on the 1450, well then we've got something, and you're not just breaking through there like this either. The breakout's important because part of a process, but which process? So the breakout's important, but the retest is more important. So if it's going to be a bullish case here, we simply need to have this 1450 as the support. On the short side, in terms of actually trading, then we want the 144 here to be the resistance here. So once again, it's just not enough to move through. It's got to come back and fail the retest here. In this case, it didn't fail the retest here. So we may have gone short here as such on this one here, but if it took out that high there again, we'd have to be out of it because it hasn't held as such. So working from a particular price point and understanding the risk is the first ingredients of trading. So look, that's pretty much it really in a nutshell, and this is what we've sort of held all week really. If the 1450 became the support, then we would be long. If the 1440 became the resistance, then we'd look to the downside. So all we're pointing out to today is that this particular ABC structure here really sort of gives it a bias to the downside, but we still need to wait for confirmation on that. And Europe's kind of the same in its own little way. Of the DAX has been following the US markets, and the FTSE's been doing its own thing, but the FTSE and the DAX have sort of come in tune a little bit now. They've both got this same pattern here. And really, as you can see here, for the FTSE here, we've got the 5,800 here, it's a minor trading level. And then below that, we've got subgroup 2, the 65, 72 and the 80. And then above this, we've got group 1 here, the 10, 20 and 30. It's the job of group 1 to hold the price to the closest largest number, the 58. And also for the subgroup 2 here, its job is to hold the price to the support for the closest largest number. So we've got this range in here. Now, if this 72 becomes the resistance, then we'll be looking to the downside. If the 30 here becomes the support, then we can go to the upside. So it is the 30 and the 72 that would give us that. And that's always the case when dealing with group 1 and group 2 here and working with the closest largest number, because working in this little area here can create losses because larger orders are going to be around the larger numbers, of course. So yeah, we just need support on here or this here. You can get in earlier from that. And I sort of do see this as a positive thing here, actually. But we just need to see a bit more development in the US markets. It's really all about, will Spain take a handout, a bailout, so to speak? And it's the same for the DAX here as well. The FTSE was at 5.8, the DAX is at 7.3 here, and also with the DAX as well, this is a top of our market in here. We do have this 5-wave structure down through here, so it is giving us an impulse wave, but I'm not too concerned about that because I know in reality that this can also be an A wave down to here, an A wave to here, a B wave to here, and a C wave to here. So I'm not that sort of hooked on that at the moment. In the bigger picture for the DAX, if the 72 became the resistance, then it's a serious pattern unfolding to the downside at that point there. So I'm not worried about it there. And also in terms of day trading, the 72.72 here is the critical thing that you would need to have a short trade through here. While the market is above the 7,272, then you can consider it being a positive market, but it would only be once it's found support on the 73.30 that you could push to the upside with a small position, and then looking to add once the 73.50, the midpoint became the support from that point there. So just be aware of that price point. Okay, and the Australian market is in its own element here, and so it continues to push up. We had nice strong volume come in yesterday for this market, and I mean obviously everybody was thinking about the 44 and being above that. We knew that it was there, so we've basically been sort of looking at being long from the 61.8 retracement level from this point here, looking for support on the 44 here. Now the 44.50 is going to be quite important because it is a old high for this local market through here. Just bear with me, we'll just drill in here a little bit. So this old high here is around the 44.50 as well, so that's going to cause some grief at that stage there, so just be aware of that. I thought we had more volume in here, but obviously not. I'm just looking at this volume here. It is low. I thought it was actually more. I must have been looking at another chart. But look, anyway, we've been looking at this structure through here. It's still positive, and our next target would be the 45 up here in degrees of minor trading levels, and that would also be the supply level over here as well. So it will run into problems there, so just bear that in mind. In moving up through here, of course, there's a couple of steps to take, and what we're seeing at the moment is we're seeing that the 4400 is got support in the retest here, and now we've got group 1, so the 10, the 20 and the 30 has got support as well. So it was resistance here, and now it's support here. So the next numbers to be working with if you're going to go long is you need the 44.50 as support, but as you know, that's also a high in the cash market as well, so it's going to create a bit of trouble there. And if we're in the bullish weekly cycle, then, which I think that we are, then it's Wednesday today. Wednesday is down in the morning and then up in the afternoon, and then Thursday is the bear day, and then Friday and Monday to the upside. So that will be the cycle of things. The levels support. This can also come back into the 44.20 here, by the way, but that will have more support within here. But we're looking for it to push higher over the week ahead. I know that's out of line with the other markets, and but I picked that up early in the week. So even when the US markets were down early in the week, we were still going to go long on the local market, and that worked out quite nicely. So we still see this moving to the upside. There. Alrighty, well, let's have a look at commodities, as they were a bit mixed last night, but the copper market was up, but US BHP was down. So there is weight to be noted there. Okay, looking at copper first, central to the base metals, and we're looking at this being a third wave up here, a fourth wave here, and then a fifth wave up here to make the third wave up through here. But that third wave up there could also be the top of an ABC, but we won't worry about that just yet, and we'll work through that when we get there. But we are expecting a new high above these highs here in due course. Now, I don't know if it's going to come straight up from here and make it through to here, or we're actually going to get a more complicated wave 4, which we should do in terms of an A wave down to here, a B wave up to here, and then a C wave down through to here again, so that wave 4 could be over here. And that's the thing with the wave 4s, especially when wave 1, 2, if wave 2 is simple, then the guideline of alternation would have wave 4 as being sideways and complex. So that's the case there. We know that there's resistance at the 380, so we're just watching that work through there. So just drilling into this a little bit here to give us a clearer sort of idea there is that we've had this move coming down through here as the wave 4 to the 38.2 retracement level at 367, which is close enough. And then we're looking at this move coming up through here, and this move coming up through here so far is is in three waves. So I've got it labelled as an A and a B and a C for probably a B wave. So we could look at this coming down as an A wave, a B wave. And if that's the case, then we would be looking at, once this little 5-wave structure here is finished, then we would be looking at 5 waves to the downside here in terms of something like this here to make the C wave a 5 wave there, and then we would move up from that point there. So it's something that we can look at. We could also get 5 waves coming up through here as well. And we can just be mindful of that, but I just think that we just need to consider this bearish picture here for a moment. But certainly we can get up for 1 and back for 2 and pushing up for a third wave and making new highs here. So the best way to deal with that is just to allow it time to work at the 380 here. So it's had its arrival, it's having its reaction, it's checking for support, which will be down through here somewhere. So if this support here becomes the resistance, then we're going to get more downside from that point there. So in essence, this 1, 2 here would be the same as an impulse wave to the downside. It would also be the same in the corrective wave as well, because we would have this move down through here, then we'd have the retest there. So you won't know for a while. So you need to be patient and give it time to work itself out. So normally, if it's going to be pushing to the upside, then it will push up to here for the arrival, the reaction, then the first high above the level, and then it will have an A and a B and a C across here, and then find support on here. So it's not that it can do very much anyway, but in both cases you have to wait. Getting caught up in the arrival and support and in the beginning of the topping process is only trouble. But what we've said all the way along is that while the price is above the 372, then the general base metals prices will be stable, and if they're in the upper band here, then obviously they're going to be more positive and so forth. But when we're looking at US BHP, we can see that it opened higher and closed lower today as well. So that's sort of something that we can expect as well. So just be aware of that. The oil market is doing pretty much like what we expected it to do. So, as you know, we were looking for the A wave to come up through here, the little 5 waves for the A wave, the 1, the 2, the 3, the 4, and the 5. And now we're moving into the B wave here. The B wave would also be in 3 waves as well, as they normally are. So we'd be looking at this in a smaller A, B, and C down through to here, and that would be something like down the C wave in here would be 5 waves, the 1, 2, 3, 4, and 5. So the 91 is support, or down there somewhere would be the support. Once that's completed, then we would see the C wave push to the upside there. With corrections, with an A and a B and a C wave here, they also have alternating structures as well, in terms that one can be simple, the next one can be more simple or more complex, and then simple again, or more complex again. So what you see is never what you see in trading is never what you're going to get next. And once you understand that, then it makes life a little bit easier. It's not like working in the real world when you go to buy something. You can see something and then you buy it because you know that's what you're going to get. But in trading, it's not like that. You're always getting the opposite. So. Okay, so gold and being a metal, and copper being a metal as well, there's relationships there. So we think that the same thing could be occurring here as well. So that would give us a 5-wave structure coming down through to here. But before we see further upside there, of course, because if this is a 3-wave structure up through here, we know that this is 3 waves here, and we think that we've got 3 waves here, so we should get 5 here and then a push to the upside through here. So if you're long in this market already, then you would need to reduce if the 1772 became the resistance, and then you want to be clear of the trade if the 1765 became the resistance as well. And then we would like to see this market move down, breach the midpoint here at 1750, and if it did that and then found support on there, then we can build a long trade from that point there. So you need to move and groove with the levels there and the price action. Alrighty, let's have a look at the currencies and the US dollar, which is behind some of these moves. Okay, looking at the US dollar here, we've got the same story. We're looking for wave 4 here, and we would like to put that wave 4 there, but we can't confirm that just yet, and wave 4s can get rather complicated as well, so this could actually get larger as well. This could just be the A wave and then a B wave and then a C wave coming up through here as well, so it can get bigger and uglier, so we just got to bear that in mind, and this would be the flip side for the euro as well. So just drilling into this little section here, once again, is that we're looking, we would like to call this in as a top through here, but this move down through here is sort of a typical bullish corrective move. So it appears that we're going to see more upside here. Of course, that's going to put the US indices under pressure, but also the euro as well, so need to bear that in mind. And this is starting to develop like a little positive move through here, a little 5-wave structure through here, because I can see that we've got the 1 and 2 in here, the strong third wave in the middle here, and the wave 4 here. So look, while the price is above 79.72, then it's long for the US dollar, and the 79.72 as resistance would be short for the US dollar, and then you can take all the other currencies in that direction as well. So that's as simple as we're going to get it for the time being. Of course, the 80 is another, a resistance point as well, but this move down through here as an ABC here makes it corrective. If this was going to be an impulse wave to the downside, the beginning of wave 5 to the downside, then we'd want to see this move here being quicker to the downside. And that's not the case, so it doesn't really have the personality of that particular structure. So it could be counted the other way in terms of down for 1, an A and a B and a C wave here, and then failing and then moving down. And that's why I mentioned that the 79.72 as support or resistance, you just need to be, as a trader, you need to be on the right side of that particular number there, and you should be safe from that point. So taking this sort of concept here and looking at the euro, for instance, just have a look at the bigger picture first, just to get bearing. So look, we're looking for a wave 4 to come down through here, and we're looking for a wave 5 to get up. But we've always known that wave 4s can get complicated. So we just need to watch this. We thought that we may have had the low in through here, and it's still possible as well. And this move coming up through here over the last 2 days through here, when we look at that, it has come up nicely, and it's come up for sort of, I've put 1 or the A wave here, and then the A, the B and the C for the 2 or the B wave here, and then we need to be looking up for the C wave to here, or a wave 3 to the upside here. But you can see how this is really quite strong in the beginning here, so that's good for a wave 1. But if we're going to have a wave 3 over here, we need to see it stronger. But you can see that it's really sort of moping along here, so it's not really got the personality of a third wave structure through there. It should be stronger than this one here. It's more like a C wave in here. So if the A wave is sharp, then the C wave is normally on more of an angle and slopey, and so it's got the person of a corrective structure. So we just need to be aware of that. But also as well, in technical terms, we need to see it. We need to confirm the price action in breaking some rules. So we really need to see this under the 129 here. Well, technically this low here would need to see this price here come down under this low here, and then we would have an ABC correction, an A and a B and a C correction to the upside. So until it does that, then I just have to chill out and wait for that information. So we could short it if this became the resistance here, this 128.72. There's probably a better short trade on the pound here. So this is a 4-hour chart here. So you're probably better off working a breaking and a retest of this move through here on the pound. So look for a move down through here and then retesting that trend line back up. And on that failure of that trend line through there, then you can move it from that point there. But this is more of a corrective pattern here. So we've got an impulse wave down here and a corrective pattern here, so it should break lower through here. So you might be better off looking for that trade there, I think. In terms of the Australian market here, obviously they've altered the cash rate by 25 basis points, and this is where we are through here. So we're expecting this to come down. There's two ways to count this. There's the way that from this point here we can count this as an A and a B and a C wave coming down through to here, or we can count it in a 5-wave structure in terms of the 1, the 2, the 3, the 4, and the 5. So both are valid, but I think the main point to work out first is that this structure down here's got 5 waves in it. That's fine. This structure down here has also got 5 waves in it. This length here is exactly the same length as this length here, so there's equality in there, so there's going to be support into here. So if we count these 5 waves down through here, and then also 5 waves in from the 103 here, then we're going to find the low in through here, aren't we? And then we're going to get some sort of retest back to the 103 at that stage there. So if we drill in from this, say from the 104 there to start with, so we've got the 104 here, so we've got the 1, 2, 3, 4, and 5 down to here, so we're getting close. So what we need to do now is we need to drill into this little structure here, so there should be 5 waves in here. It's sitting on the midpoint here so far. So, and also this number here too, bear in mind, this is the 272 number here. So as I always say, the 72 is important, but 272 and 772 carry a lot more weight, and we're going to be seeing more of that particular number here. So in that last little structure to the downside here, we can see that we've got 1, 2, 3, 4, 5 to here. So 1, 2, 3, 4, 5, so that's wave 1, that's wave 2 there. So this is likely to be wave 3 coming down through here. I can't see it all through here. I need to work on that a little bit. So this is likely to be wave 4 here, retesting the 272 here. That should fail, and we should see a move back down again as well. Now that move that comes down from this area through here won't come that far down. It will be about the same length as this structure here. So we could end up down at the 30 here somewhere, so in amongst here somewhere before we see a bounce. I thought we may have had the bounce off the 102, but and we'll get that if we're going to get 5 waves down. So yeah, anyway, still edging down a bit lower there. So alrighty, I think that's it. The other point that I just wanted to make is that we are going to go down to the Melbourne Expo, so we won't be available at the office number here, so you'll have to contact us on the mobile or the email, and we're going to make a bit of a holiday out of it. We're going to drive from Sydney to Melbourne, so so we'll be away a week basically, but we'll still be updating everything as normal. However, because we'll be on the road, the UK and the US robos may not be updated tonight. Well, the UK won't be perhaps, but the US markets will be, and also during the expo as well on the Friday, they may not be updated the UK one may not be updated because we'll just be a little bit busy there. So apologies for that. It's all part of life. So some of the things we do benefit some and not others, but it's just a bit tough that way. But look, anyway, we'll be there on the email if any questions need to be answered. Alrighty, well, good morning and good luck.